Hey everyone, welcome back to this Grow 90 courseX program. I'm Jodash, I'm a final year undergraduate at IIT Madras, and in today's video I'll explain you the basics of stock market. So without any further ado, let's get started. The first thing that I'll explain you is when and how the stock market started. The stock market started at 1602 with this company named as Dutch East India Company. As the name suggests itself, they used to sell spices to European countries. Okay, they used to sell spices, they used to import the spices from India and sell to the European country and used to sell to the European country. Okay, so they were very much profitable that their value went to 7.9 trillion adjusted to today's inflation rate, which is almost summation of all top 20 companies, right? So it's a very profitable business, but the profit comes with a risk. That's why what they did, in order to divide the risk, they actually started sharing their profits. Okay, they started sharing the profit with the one who used to buy their stocks, okay, who used to invest in their trips. All right, from there and there itself, the modern day stock market started. Okay, so yeah, that was the inception of a stock market. Right, now we will know what is a stock market. Stock market is basically a place where the buyers and the sellers come together and they negotiate with each other to a uh, to a rate where both of them agrees with each other. All right, and then the trading happens, and the stock markets works as a medium of negotiation. I mean, where they can negotiate with each other. So I mean, in nowadays it's a everything is traded in using computers. So computers, they actually connect to buyers and sellers. All right, so that's how the today's stock market works. All right, initially the stock market was like under near a bridge where they used to trade stocks and bonds, this Dutch East India Company. But today you can sit in your home and trade with and start trading using your phone. Okay, where the stock market helps you connect to the seller or buyer, whatever you want. Okay, so India has two major stock markets. One is Bombay stock market, another one is national stock market. Among them, Bombay is the oldest one. Okay, it is the oldest. Okay, but the largest one is NSE because the uh, it has the largest number of volumes. All right, the yeah, so in volumes this is the largest. Okay, so this is the oldest, but for in volume this is the largest. Okay, as of 2020 February, BSC has 5,518 listed company, BSC, and NSE had 1,799 companies. All right. Okay. But among them, only 90% of the only 500 firms constitute the 90% of the market capitalization. Market capitalization is basically the total price. Okay, this is basically number of shares multiplied by share price. Total value, sorry. Yep, price. Okay, so 90% of the total market capitalization is contributed by 500 firms out of this 5,000 firms. So yeah, you can see now you can see how much there is a differences between large caps and mid cap companies. Okay, so the thing is, how do you trade? Okay, how do you trade in NSE and BSE? So for nowadays, NSE and BSE, they actually opens up a connections between the brokers. Okay, where the brokers can help you trade in that NSE and BSE. So NSE and BSE is connected to a brokers, where the broker might be Upstocks or Zerodha, and you can connect to Upstocks and Zerodha. Okay, and the substruction zerodha can help you in trading in NSE and BSE. So typically in Indian stock market, the market opens at 9:15, all right, and it closes at 330, and Monday to Friday, and yeah. So yeah, this is the timing of a stock market, all right. And in today's stock market, 5% of the uh, trades are done in a conventional way, that is equity delivery. This is the traditional way of trading. But in today's world, only 5% happens similar to this. Most of the trades are intraday. 15% of the trades are intraday, and remaining 80% are futures and options. So you can see that, yeah, we have come a lot from the um, traditional way of trading. Okay, so now we'll understand what are the different types of traders. Most of you have watched Scam 1992, so they might be aware of these terms. All right, we have bulls and we have bears, where the bull represent the people or the traders who are actually buying stocks. All right, and the bear represents to the people who are actually selling stocks. Okay, so the market is always a competition between the bulls and the bears. Okay, there is some other people like corporate, the snakes. These are the corporate insiders or TV media, those who manipulate the market. All right, so those are the snakes. Okay, so now we'll know what are the different types of traders. Okay, we have two types of traders: low frequency and high frequency trader. So in low frequency, Warren Buffett is the famous guy. Okay, he does the fundamental analysis of all the companies. He knows which company will go up, which company will come down. So yeah, but he trades very less amount of I mean, his total number of shares are less. Okay, but then whatever he invests it properly, understanding the company's fundamentals. So yeah, so that's how he keeps for 1 or 2 years at least minimum. But high frequency trader like Simons, he's a mathematician from MIT. He does high frequency trading. The number of trades are in millions. Okay. Yeah, he generally generally do trading for a short period of time. Okay. Okay, so that's why, I mean, yeah, that's why the profits here might be less, but when multiplied by number of trade, it will be similar to the low frequency trading. All right, so yeah, these are the two types of trading. Now we'll know how do companies list themselves in stock market. So the simple way of listing themselves is like they go to the stock exchanges, and they announce to the general public that we are going public at so and so date with a price band of this to this. All right, and people starts subscribing to the stock. Okay, and after the subscribing gets over, subscribing in the sense the people starts uh, bidding for the stocks. Bidding in the sense they starts mm, I mean dips. Okay, so they generally say that, yeah, I will buy this many stocks. Okay, they starts bidding. Okay, and after the bidding gets over, the stocks are randomly allotted to the people, right? So that's how the stocks is um, that's how the company is listed to the stock market. Now we'll see the previously or the past IPOs. This is known as this process. The entire process of listing a company is known as IPO, or initial public offering. All right, so using this process, the company goes public, or it lists itself in a stock market. Okay, so we'll see to the to the past IPOs that happened. So yeah, so Anthony Wasteland, it actually offered its stocks at 313, and in the first day itself, when it got listed, or the day when it started trading, the trading of that stock started, at that day the price jumped to 407. So you can see from 313 to 407 in a single day. There is a huge price difference. All right, so you can earn this much money in a single day, right? That too in one single stock. Now you can buy hundreds of stocks and multiply the profit into 100. Similar to this, you can see 286 and the listing price was 595. To this also 59. Already explained in the last video that the stock price was 59, but the listing price was 138. Similarly, we have Gland Pharma 1490 and the listing price was 1820. Okay, we have Equitas Small Bank. This is on not only every time, so it doesn't mean that every time the stock will go in a positive direction and it will give you profit. Sometimes it gives you loss. So you can see it started with 33 or 32 and the listing price was 32.75. So there is a loss. All right. Now we'll see what are the upcoming IPOs. So you can apply for these IPOs. Okay, applying IPO is simple. Just open an account in Upstocks or Zerodha, and they will give you an website or URL link where you can go and follow the process, okay, of applying the IPO. So yeah, just don't go and start applying the IPOs. You need to do a bit of research, which I'll explain you in the later videos how to do the research part. Right. So for now, I just gave you the idea, right? How is this IPO process, how this IPO process works, and what are the next upcoming IPOs. All right. Okay, this gonna go up, so if you invest on this you might get good returns, right? So yeah, so since we know all those IPOs and we know what are the different types of traders, now we'll understand the charts. Okay, so the basic chart, and in this video I'll keep the most basic chart for you, that is the OHLC graph. What is an OHLC graph? It is a graphical representation of the movements of the price. Okay, the price of the stock. Okay, so what is OHLC? The full form, I'll tell you the full form and you will understand what is the meaning of that. That is open, high, low, close. Okay, so if you consider this is a stock price graph, okay, and this is plotted within an interval of 1 day. Now when it opens up, the price is something here. So this is the open price. All right, so remember this is the open price. Now when it goes down to the lowest point, so that is the lowest price, and then it goes to the highest point, this is the highest price, and then it closes, or the trading gets over at some price, right? So that is the close price. So this happens in an interval of 1 day. It might be of 1 minute, 1 second, 1 hour, okay, or 1 month. So it doesn't matter, but just remember the open price is known as the open price. Right, high price, low price, and this is known as OHLC graph. OHLC graph. Now there is one more thing, volume. Volume is the number of stock traded during that period. Okay, number of stocks that is been moved from one person to other. Okay, that is known as volume. So in financial term, we tell this as a OHLCV data. Okay, we will be using this data in order to understand how the stock performs. So whenever we do technical analysis, we will use OHLCV data. Okay, and if you go to the stock, if you go to the broker's website, or if you go to Upstocks or Zerodha, you will see the first graph. If you click on the graphs or charts, you will see the first this graph. Okay, OHLCV graph. Now there are other things like Japanese candlesticks. Okay, some indicators or area based, like some area. Okay, so those things will be explained in the next class. Okay, and we will get to know more about the charts and how you can actually gain more profit by understanding those charts. So till then, bye, see you in the next videos.